All right, let's talk about stock charts. If you've ever looked up a stock or even just glanced at the financial news, you've seen them. They can look, well, pretty complicated at first glance. But today, we're going to break it all down. By the end of this, you'll know exactly what you're looking at. So, have you ever seen something like this and just thought, what on earth is going on here? It looks like a secret code, right? A jumble of lines, bars, colors. But trust me, there's a method to the madness, and it's actually way simpler than it looks. Okay, let's just boil this down to its absolute simplest form. At its core, a stock chart is just a graph. That's it. Its only job is to show you the price of an investment, like a share of a company, and how that price has moved over a set period of time. See? Not so scary. So here's our game plan for the next few minutes. We'll start with the basics, then build up to the most common type of chart. After that, we'll decode all the little details, look at some fancier charts, and finally, we'll touch on why people use this stuff to make decisions. All right, first things first, let's really nail down what a stock chart is at its foundation. No matter how wild or complicated a chart looks, its main purpose is to answer two really simple questions. What's the price? And how has that price changed over time? It's really just a visual history of a stock's journey. Okay, so now let's dive into the one you've probably seen the most. It's the most basic, the most common, the simple line chart. Building one of these is incredibly easy. Think of it in four simple pieces. First, you've got the line across the bottom. That's your time axis. Could be days, weeks, even years. Second, the line going up the side. That's your price axis. Third, for each period of time, say each day, we put a single dot where the price closed. And finally, step 4, you just connect the dots. And boom, you've got a line chart. It's a super clear way to see the price's journey. Okay, but wait. If you look down below the main price chart, you'll almost always see this other little chart, the one of the vertical bars. That's not price. That's something called volume, and it's a really important piece of the puzzle. So what is volume? It's just the total number of shares that were actually traded, bought and sold, in that specific time period. Think of it like the crowd noise at a game. A really tall volume bar means a lot of people were getting in on the action. And that's key, because a price move that happens on high volume is often seen as way more significant than one on low volume. Okay, so we've got the line, we've got the volume, but what about all those other numbers you usually see floating around at the top of the chart? Let's decode those because they tell a much bigger story. These numbers here give you the entire play-by-play for a trading period. You've got the open, that's the price when the market opened. High and low are pretty self-explanatory. They're the highest and lowest points the price hit. Close is that final price at the end of the day, and that's the number we use for the line chart. We just talked about volume, and change is just how much the price went up or down from the previous day's close. And that actually brings us to a really important point. A line chart is great, but it only shows you the closing price, right? What if you want to see the open, the high, the low, and the close, all in one simple picture? Well, that's where bar charts and candlestick charts come into play. So here they are, side by side. On the left, you've got the bar chart, and on the right, the candlestick. Now, they might look a little different, but here's the key thing to remember. They show you the exact same 4 pieces of data, the open, high, low, and close. They're just different visual styles for the same story. So how do you read one of these bars? It's actually super intuitive. The very top of that vertical line, that's the high price for the day. The very bottom, that's the low. Then you've got these 2 little horizontal ticks. The little tick on the left is the opening price, and the tick on the right is the closing price. With that one little shape, you get the entire day's trading range at a glance. Now, candlesticks show the same stuff, but they have this awesome visual shortcut, color. Usually, if the candle is green or white, it means the price closed higher than where it started, a good day. If it's red or black, it means the price closed lower than where it opened. This color coding is amazing because it lets you see the market sentiment for the day in just a fraction of a second. All right, we've made it to the last piece of the puzzle. We know how to read all these charts, but the big question is, why do we do it? This gets us into the whole idea of analysis, of learning to read the story that the chart is trying to tell you. This whole practice of studying charts is called technical analysis. It's a strategy built on the belief that you can analyze a stock's past price movements and patterns to find clues about where it might be headed next. It's a bit like being a detective for the market. So what are these chart detectives hunting for in all these lines and bars? Well, they're looking for things like trends. Is the price generally moving up, down, or sideways? They're on the lookout for specific, recognizable patterns. And they're always watching those volume movements to see how much conviction is behind a price change. And this quote really gets to the heart of it. A technical analyst might believe that when a certain candlestick shape appears on the chart, it could be a sign that the market is about to turn and head upwards. It's all about finding these potentially repeatable patterns in human behavior, which is what these charts really are. So, after all that, which chart should you use? The line, the bar, or the candlestick? Honestly, there's no right answer. It's not like one is better than the others. They all have their own strengths, and it really just comes down to personal preference. My advice? Play around with all of them and see which one you find easiest to read. At the end of the day, every one of these charts is a history book. It's telling you a story of what's already happened. Learning to read them means you understand that history. But the real challenge, the whole reason for doing any of this, is trying to figure out what the next chapter of that story is going to be.